So the game is just on, and they have a long way to go, and they're doing a lot of damage. I think we're in that kind of situation right now. The Fed will panic and will public. So I think we're near that point. So what I'm looking for is the stock market drop to actually explode gold. Bank of America and Citicorp have dropped more than, let's say, JP Morgan or a few others, but they're all down hard. And I think that more of that money will flow into the miners, especially as the perception hits that this really is a bear market in stocks.
Michael Oliver sounds the alarm on something even bigger. Gold is being drained from the LBMA. The banking sector is flashing red, and a major shift into gold and miners is already underway. Is the system running out of time? Let's dive in, because what's coming next could shake the markets to their core.
I think it's been happening ongoing for the last several months, where early money has been moving out of an asset category they deemed to be too high risk, too low reward, even though it hadn't dropped at that point, January, February. The money was starting to move. That's why miners, for example, shot up substantially over the last several months. In fact, XAU index and GDX, the ETF, if you look at the last 3 years of action since 2020, they blew that stuff out. It was a ceiling. And yeah, you pull back slightly below it, but you closed last month substantially above it. And I'm going to bet by the end of this month, you're still substantially above that range that prevailed back to 2020. So their price action has just woken up. And I think that more of that money will flow into the miners, especially as the perception hits that this really is a bear market in stocks. The talk of correction is starting to get a little wobbly right now. It could be, obviously, it could be one or two or three here or there, but I'll just look at all of them, and they're all behaving very much the same. The only difference is some of them are down a little more than the others. Bank of America and Citicorp have dropped more than, let's say, JP Morgan or a few others, but they're all down hard. And the point is, it's not that they've been going down for a long time and therefore might be near the end of a decline. By our metrics, the decline just commenced. Technically speaking, on quarterly momentum. It just broke late last month, early this month. So the game is just on, and they have a long way to go, and they're doing a lot of damage. And I can see some of the price charts that people are looking at saying, well, let's try to buy it here. It's ripping through prior pivotal lows freshly. So even the price guys should start to get concerned here. But I think that's the area that, again, it's not a headline. For some reason, they're still focused on the Mag 7, but it's the banks that are the one that really count. And the other sector that is very dangerous is commercial real estate. We've been pounding the table about that for quite a while. Not mortgage real estate, but commercial real estate, because that's a debt crisis arena. And there's a couple of ETFs on that, RWR and VNQ, that you can look at. And they own the big companies that own the shopping centers and the commercial centers and the computer centers and all kinds of things like that look like hell, technically. And they have a lot of debt. And we know that that could be an arena that impacts the banks if you start to have problems there. And so don't be surprised in the next month or so, you start to see some, oh my gosh, a headline out of the financial arena. And that's when the panic really sets, because when the public starts to hear that stuff, NVIDIA going down is one thing, but when you start to have banking problems, the Fed will panic and will public. So I think we're near that point. So what I'm looking for is the stock market drop to actually explode gold, especially the banking sector, because that's when the Fed puts the pedal to the floor, and we're back in November of 2008. Forget the October drop. It's the November action by the Fed that took gold right off the page and went from 600 and something up to over almost 2,000 over the next couple of years. Despite the stock market continuing down for 2 more quarters, gold was back to its highs. So I think we're in that kind of situation right now. I'm not sure about that situation. I don't pay much attention to it because it's one of those that's transient. Yes, it's a big issue right now, and it probably does reflect incredible demand for the physical stuff. And that's interesting in itself, because owning the physical stuff instead of the paper version of the physical stuff indicates concern. If you want to put it another way, panic. I want to hold the real stuff, okay? Not a piece of paper that's contingent upon certain things not occurring. Okay. So that could be an underlying statement of what's going on out there in terms of sentiment among large acquirers of gold. And right now, the public is really not, the American public in particular, has not gotten behind the gold bandwagon. They've missed a tripling in the price of gold over the last 15 years because they've been focused on the stock market. Now that bubble's starting to break. The question is, well, will gold go down with the stock market? Yes, in a brief period, it might. Well, for some reason, this past week, which has been disastrous for stocks, gold didn't go down 2%, if you want to call that down. So I think that the money flow is moving, and I think the silver situation is very unique because there's a mistake being made. One, it does move with gold ultimately. It does not move with commodities generally. Their historical correlation is not good. Its correlation with gold is very good. Right now, it's in a slingshot underperformance situation to gold, but I think it's a great mistake, which will snap back quickly. So when gold does start to outperform, my bet is it doesn't crawl back. It does something fairly explosive in terms of net price gain. So we're still quite bullish on the monetary metals, and we think this is a bear trap situation, especially for silver. And don't pay attention to the commodities in relation to silver. Pay attention to gold. Probably the latter. We do know that leverage in the U.S. stock market is like triple its norms, okay? Triple any prior time. I've seen studies on it. I don't pay that close of attention, but that's an interesting fact. And therefore, this drop, which is now maybe getting to the point of creating margin situations, but we do see a bounce point in the S&P, a potential bounce point. And it better well bounce from there. But that's down another, like we're trading near 5,100 today. The S&P looks like it might have a bounce point at 4,800. The NASDAQ 100 is trading in 17,500 area. It might have a bounce point in the 16,000 area. So a good handful of percentage drop, 6, 7, 8%, and you'll get to a possible bounce point. Not a low, but it could. But that's still not a crash dimension, actually. You know, if you think about it, 30% drop is a crash in a matter of a couple of weeks. That's what happened in October 2008. And so far, though, we've had a sharp drop in stocks from the highs of a month ago, February, I think it was, to the present. It's still not crash dimension, and though you get a bad day here and there, there's not like a 30% drop. Who knows, maybe we'll get it. Now, if S&P ever violates 4,800 substantially and closes a month out, like, much under 4670, let's say, I'll give you a number. At that point, you're blowing some other momentum structures that say all hell could break loose. But right now, we tend to think you could have a bounce point around the 4,800. Now, that might get relief to the commodities, and silver might bounce. But right now, I'd be focused on gold and silver as basically the only place to really be when the central banks panic, realizing what is actually going on, especially with financial institutions.
As the banks wobble and gold flows out of London, the message is clear. Confidence is shifting. If you're watching the signs like Michael Oliver is, you know where this is headed. Tap that like, hit subscribe, press the bell icon, and let us know. Are you moving into gold before the storm hits?